Hello everybody, Corey here. We are going to go over the daily trades and holdings of the YieldMax single stock ETFs. Just a reminder, I am not a qualified licensed investment or financial advisor, and that I'm just here to gather the data, present it to you so you can make your own decisions here and be more informed. YieldMax ETFs are extremely risky. You could lose a lot of your capital, your original capital in these, so please make sure you are very careful and know what you're investing in before doing so. Let's see. Also, another reminder, again, these are the single stock ETFs. So YBIT is not technically a single stock ETF, even though it has currently a single ticker in it. So it is separate. So on my daily roundups, I do have maybe the price of the and if it recovered and stuff like that, just like I do for YMAG and YMAX and Ulti. But it does have its own separate video. Its distributions are separate. If I remember, and I think I only remembered it maybe once, if at all, this week. If I remember when I'm doing the other distributions reviews, I'll add it. But because I don't, unless I make myself a note on there, I'm probably not going to remember because it's not on the sheet. But I do go over those in their own video for YBIT and Ulti. So just to put that out there for those of you that may be new to my channel. So we're going to jump in here. I will say historically, since the past, I don't know, 3 months or so, it's been more than 3 months that I've been covering these. It's been almost 4 months that I've been covering these daily, but I did not go back and look, but I'm pretty sure this is the least traded day ever. There's 2 tickers here, 2 ETFs that have trades on it, and that's it. And that's only because people closed out of the fund. So if that hadn't happened, doesn't look like they would have made any trades. So I don't know if that was just because a lot of people didn't buy in recently for them to do so, or I don't know, maybe they're going to try to start doing less trades. I wouldn't just say that based off of one day, but these can get to be a lot, I am sure. And they're always tweaking what they do, as they learn and go through these. Now, again, I'm not going to say that's what they're do just because one day happened, so I probably shouldn't even have said it out loud. But anyway, let's jump in here. So we have AIYY. You can see that they've closed out 210 of the synthetic and short call here. And I zoomed in too much because we want to be able to see all of this here in one screen. Just a reminder for anybody that's new. I haven't done this in a while, but I know we have quite a few new people, and I've been forgetting to do it. But the way this normally works, with all the short calls, the one with short calls here, you want the strike price to be above the synthetic. You want the stop price to be above the synthetic strike call. So in this case, you would want the stop price to be above $30. And then for the short call, you want the stock to be below that. Of course, in this case, the synthetics, they were done a month or so ago. So we have fallen below that. But what they will do, the synthetics are done every couple of months or so. Then the short calls, those are done weekly. So those would be, based on whatever the current stock price is at the time. So in this case, we do want it to get up to the $29.50, but preferably not above it for our weekly short call this week. But it can more than happy to go up above that $30 for next week, right? But anyway, so because all of these synthetics don't expire for another month and a half, we'll just mainly be looking at the short calls here, and we'll be looking at the possible upside. Of course, everything is here for you. The yesterday's strike price, today's strike price, yesterday's stock price, today's stock price, and hold on, let me back up. So when you watch this video, It is going to be, we're going to be a day behind. So, and it says yesterday, that's going to be June 3rd stock price close. And then today is actually going to be June 4th. So I apologize for that there. And then, of course, you have the roll up as far as the market value on the left-hand side for the short calls and the synthetics, and then you also have the net assets and outstanding shares there for each one of these. All right, so in this case, you can see the short call is $29.50. We are currently over that by 1% or 17 cents. So we don't have any upside here for the short call. You would see that over here in this column, if so, a positive number. But even though you don't see any possible upside for the short call, you could see some upside for the synthetic itself. So this doesn't mean that the stock price, oh, my foot massager came on. That doesn't mean that the stock price for this one will not come up any. Okay, so just keep that in mind and just know that throughout, right? If the market value of the synthetic goes up at a higher rate than the short rate or short call value is going down, then it could outperform, right? So just keep that in mind for all of these. I won't mention it for all of these. I've gotten to the point where I have been. So hopefully everybody hasn't fast forwarded, which then brings me to my other point that please fast forward through these for the ETFs that you do not want to look at. And I'm sorry, but it's just I do these videos daily. They're only really good for that day. So I will not go back. I will not be every day trying to, go in and put tags and the time frames for all of these videos. That's just too time consuming. We're lucky enough that I'm even getting the videos done, which doesn't even happen 100% of the time for all of the videos either. So I apologize for that, but please just, again, fast forward until you see your ticker. These are in alphabetical order with the exception to the short ETFs, which have the short puts. Those are actually last, just to make it easier as far as not swapping back and forth. Will I change that later? I don't know. I don't know if there's a need to. I don't know that anybody cares, but right now Crash is the last one. So anyway, we are going to move on from here. AMDY here, we have the short call with 170 strike price, and we are underneath that 6%. So we have a possible upside of about $1.02 here for the short calls. AMZ here, we have two short calls for this week, 177.50, which were already over almost $2, but we only have 50 contracts there. And then we have the 180 strike price. And we're only 66 cents away from that. So it looks like we only have about, 7 or 8 cent upside for the short call itself. But again, as a reminder, the stock's price still could go up based on the synthetic. Aptly here, we have a short call with a 192.50 strike price, which we are over almost $2. So no upside for the short call itself, but we've clearly been going up based on the synthetic there. So we still could have a little bit of upside. It just wouldn't be as much as it would be, if we were underneath our short call strike price. Coney, so Coney here, they sold 450 contracts of the synthetic and the short call with a $245 strike price. So we have two short calls here. We have the 235, which is where the majority of our contracts are, but Bitcoin has decided it wants to start going up. So we have 24,000 contracts sitting here. And we are, $9.20 or 4% over this strike price. And then we have the short call with the 245 strike price, which we're just 80 cents below. But we only have 16.50 there. So we don't have any upside whatsoever for our short call. But the stock, again, could go up based on the synthetic position. In this case, you can tell that it did because it went up to 244.20 on June 4th, and the stock price itself also went up almost 70 cents there. Obviously, it didn't go up because of the short call. So, in fact, with that, let's look at yesterday's, the day before. So, well, the day before we were a few dollars underneath that one. Yeah, the short calls only had like a 33-cent upside there. So that would have got us to around 23.50. And then we actually ended at 23.94. So it went up another 40 or so cents there. Yeah. And you can see here, so we were negative 59 cents for that short call. And here we were positive 28 cents for the synthetic. And then here, now we're $1.13 and $1.62. So you can see that this is going up higher than this, faster than this is going down. And so that's what I'm talking about for those of you that have stuck around to watch this part. That's what I'm talking about when the synthetic market value could be going up more or faster than the short call is going down. All right, so let's keep going on. So we have Dizzo here with two strike prices, 103, 104. We are at 103.33. So we're above the one strike price by 33 cents, but we only have 50 contracts there. The majority of the contracts are at 104, so we have a possible upside, of about 10 to 12 cents there for the short calls. Phoebe here. We have two short calls that expire. Oh, we're just going to assume all these expire Friday unless we come across one that doesn't, and I don't think we have any. But we're at 470 strike price is the one with the majority of our contracts. We're already over that by 1% or $6.99. Then we have the 42.50 strike price, which we're under by 1%. We do not have any upside for our short calls. But we're at zero here right this second, but we could have some upside there for our synthetics. GDXY here, we have two short calls, 36, 36.50. We're underneath those 5 and 6%, which is awesome to see after all the other ones we just went past. Of course, that means GDX did go down yesterday, $1 something there. But it looks like we have a 86-cent upside here for our short calls alone. So if we go on down to GUI, we have three short calls that expire Friday. We have 172.50, which we're already over by 1%, which is like $1.29. And then we have 175. We're only 1% from that, under that by $1.21, which is where the majority of our contracts are. And then we have 177.50. which we're under 2%. But looking at this, we don't really have any upside for our short calls. If we do, it's 1 cent. If we go up, it's going to be because of that synthetic position. Sorry about that. So if we go to JPMO here, we have the short call with the 202.50 strike price, which we're under 2% currently. So we have a 33-cent upside there for the short call. Murny, we have one strike price, 147 for a short call. We are underneath that by 1% or $1.66. Have a possible upside of 22 cents for the short calls. Then we have Microsoft or MSFO. We have four short calls, 415, which were over $1.07, 422.50, 425, 437.50. And the majority of our contracts are sitting at the 422.50 and the 425. So it looks like we have about a 17-cent upside for the short calls. And then we go to Misty. We have 5 short calls, which were over 2. We're at 1610, 1615, 1700, 1770, and 1800. So the majority of our contracts are at the 1610, which is our lowest strike price, and we're over that by 2% or $28.77. So you can see on in column AB, where's my pointer? Here, this is causing the stock to be down $1.16. Of course, the synthetic is bringing it up some. But that's the majority of our contracts there. So we don't have any upside here for MicroStrategy short calls. All right, so if we move on to Nefli here, we have strike prices of 640 and 645 for our short calls. We're underneath those 1 and 2%. Looks like we have about a 12 or so cent upside for these short calls. In VIDI, we have 3 short calls here. We have 11.35 strike price, which are already over by 3%. And then we have 11.85 and a 12.15, and we're underneath those 2 and 4%. The majority of our contracts are sitting at the 12.15 strike price. So it looks like we have a little bit over $1 upside for the short calls themselves. And OARC, 2 strike prices, 43 and 43.50. Majority of our contracts are sitting at the 43 strike price, and we're already over that by 23 cents. So no upside for the short calls here. PayPay, 2 short calls, $63 and $64. We're over the 63 by 33 cents. And which is 1%, and we're just under the $64 strike price, 1% or 67 cents. We might have a little bit of upside here only because 2/3 of our contracts are at the $64 strike price, but not a lot of upside for the short calls there. Squee here, we have a $65 and $66 strike price. We're underneath those 1 and 3%, but the majority of our contracts are at the $65 strike price, and we're at $64.25, so we're only 75 cents away from that. It does give us about a 22-cent upside for the short calls, but maybe it'll go up some more based on the synthetic. We only have a few days left this week. And then we have Tesla here with 2 short calls at the 180 and the 182.50 strike price. We're underneath those 3 and 4%. Majority of the contracts are at the 182.50 strike price, so we have about 50-cent upside or so for these. And then we have Zomo with 3 short calls, 115, 116, 117. We're underneath those 2, 3, and 4%. The majority of our contracts are at the 117 strike price, so we have somewhere around, 40 or so cent upside for the short calls. And then we have Crash. We have our short put here at the 170 strike price. We are above this by 3%. And that's the only one we have this week, so doing okay with this one for now. But anyway, that's it for today, and I will talk with y'all later. Thanks. Bye.